Good afternoon, everyone, and welcome to our YouTube live session, Trending Thursday. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Glad that you've taken time out of your day to join us for this live presentation where I am on camera. For those of you who may be new, who've heard the voice but never seen the face, welcome to you. And now we get an opportunity to see the face. Let's see who's here. Jay is here. Good afternoon, Jay. I will behave since everyone can now see my name and what I write. As well you should, Jay. Jay is a prominent member in our jockey club on a morning basis every morning between 9 a.m. and 11:30, our trading room. And Jay types a lot of things, but now he'll behave a little bit since everybody else can see him. Good afternoon, Devin, my friend. I'm going to wave back at you. There you go. Dr. Thor. Really? What are you a doctor of, Alessandra? I really want to know. Inquiry minds want to know, Alessandra. Good afternoon, Trade Shark. Sorry, I got to make sure I say it right because if not, I'll get reprimanded in the room. We don't want that. Hopefully you're doing fine, my friend. And of course, Trade Shark won't behave. I know, it's all good. Good afternoon, Paul. Good afternoon, Jerry. And again, yes, unlike our jockey club room where no one can see your questions or your statements but me, here we can see everyone's questions or statement. I'll tell you the last time I come to Dallas. Okay, there you go. All right. So glad that you're here. Di, excellent. I got a new name here. Asif, I know you as well. Good afternoon. But Di is a different name unless you're under that name, but I know you as a different name. Whatever. You're tuning in from Wales. I'm glad to see that this webcast has an outreach across the globe. Outstanding. Outstanding. So glad that you're here. First and second, bye-bye, Eli, Giants, stink, go Niners. Wow. Can we put Trade Shark in timeout?
Oh yeah, definitely.
Oh, we can do that. We can do that. Oh, keep messing around, Rich.
I got a button just for him.
Well, I keep messing around, Rich. We're gonna put you in time. Don't talk about the Yankees. Don't talk about the Giants because I am a die-hard Yankees and Giants fan. So if you come to my presentations and you talk bad about them, you will feel the wrath. You will feel the wrath. Again, thank you all for being here. For all of the new people who are here, what is this? Trending Thursday is a means by keeping on top of some of the stocks in the market that are moving by way of news. What's trending? Whether it's trending bullish or whether it's trending bearish, we're going to take a look at the stories, and then we're going to go into the VectorVest software to analyze those stocks to give you a better understanding of if the news story is really representative of what the stock is really doing. VectorVest analyzes stocks better than anyone in the industry. We analyze them for value, safety, and timing. What is your stock worth? Is it safe, and is it going up or down in price right now? Amongst a lot of other things to encompass what's really going on with the stock. So we're going to use the power and the flexibility of the VectorVest software to look at the stories of the stocks and how the VectorVest software analyzes it. That is the reason why you're here, and that is why these Trending Thursdays will keep you on top of stocks that you didn't know were moving, or to get a better understanding of if the story is right in line with what the way the VectorVest analyzes the stock. So, what are you ouching for, Jay? I don't know what wow. No, see, and what happens is, that's right, a couple of people here are already friends of mine, so they can text me while I'm doing these presentations, and Trade Shark is one of those. So, listen, I don't have to look at my watch. It may start moving, but I'm not going to look at my watch. All right, so let's get hot and heavy into it.
Don't forget to like and subscribe.
Oh, like, subscribe. All right, and because I am on YouTube, it's a little different than being on Twitch. If you like the content, like it, share it. If you have other people within the YouTube that you are friends with who may be interested in the stock market and that you want to give them an insight as to what we do, subscribe, share it. Subscribe means that you're one of the people who are on our channel. I think. I'm still getting used to the terminology. Am I right? Thank you very much. Larry says, I love your style, learn each time. Listen, I have a lot of fun doing what I do. And the interaction between me and you in these presentations make it fun. I am a big believer of you can learn something, but I want to make sure that you're comfortable in learning it. Sometimes we'll laugh. Sometimes we'll think really, really hard. Hopefully, I don't think we'll ever cry. I don't want to cry with you guys. I want you guys to make money. I want you to be profitable, but I want you to have fun doing it. And that's what I do. That's how I work it. You got AT&T time soon. Let's get, you got a tea time soon. Well, you know, hopefully you hit them straight as I drink out of my Duke Blue Devil cup. Drink my coffee. All right, wow, and Jay is right behind you and saying amen. Whew. All right, first thing I want to start off with is the home page of the VectorVest software. Many of you may be brand new to the software, and so let's give you an insight as to what the software looks like. Is that the one that I wanted, Joey?
This one.
I want that one. There we go. That's what I'm looking for. So just to give you a brief understanding what VectorVest is all about, we are a stock analysis and portfolio management system. We've been around for over 30 years. Personally, I've been here for 15 years. And by the way, sitting side saddle to me is my producer, Joey. Say hi, Joey.
Hello.
And no, I said say hi, Joey.
Hi, Joey.
There we go. And Joey has been here for 18 years. So between the two of us, we've had a lot of time here at VectorVest. You can clearly see that we love what we do. Joey is the guy that makes me look good every day. So haterade, go ahead, let it go, Joey. I'll show it. I'll just show it. There we go. All right. Jerry says we are up on arrows from this morning. I'm up 60% trading options on it. Oh, so we're still in it. That's right. That was a trade that we had this morning. So there we go, Jerry. That was a good trade this morning in the Jockey Club in our trading room. So there we go. And you said you're up 60% in options. Excellent. And that is another stock that I think we'll take a look at this afternoon as well. So let me break down what's going to happen. One, we're going to look at what's going on in the market. There's a news story that happened in regards over the last week since the last time we spoke about oil. And then there's about 6 stocks that I want to take a look at. There's about 6 stocks that I want to take a look at. But I will give you an opportunity to chime in on stocks that you're interested in as well. Do you have to make videos for those too when you do the videos?
For which ones?
For the ones that they chime in on?
No, because it's not going to have a story to go.
Okay, that's fine. All right, so I am going to give you an opportunity to look at individual stocks. Let's analyze them. Let's use the power of the software to do that. All right, first thing, what's going on in the market? So as we look at the market, we can see that our color guard, which is represented like a traffic light, you have 3 different colors represented here, red, yellow, and green. In order to get a red tile, that indicator has to go down on both the week-over-week and day-over-day basis. To get a yellow tile, it can go up or down week-over-week or day-over-day, but they don't do them both together. And green tile means the indicator went up on a week-over-week and on a day-over-day basis. All right, so keeping that in mind, I try to teach people to use the color guard like you would a traffic light. What's the main color you see in the color guard? 1, 2, 3, 4, 5, 6, 7 green lights. 1, 2, 3, 4, 5, 6, 7, 8, 9 yellow lights, 2 red lights. What does that mean? If I'm investing in the market more so from a swing trade perspective, I've got more caution advised. All right? I've got more yellow lights than anything else. If I'm looking at it from a day-to-day basis, today, primary wave is up, which is looking at the week-to-week movement of the VectorVest composite, which is the price column here. I also have a green light in the buy-to-sell ratio. This is an indicator that looks at the overall health of the market. It looks at the amount of buys in the system divided by sells to give this indicator. Above the value of 1, we have more buys in the system than sells. The market is showing signs of strength. The RT, which looks at the short-term price trend of the market, looks at is the market in an uptrend or not. So when we look at these indicators, and I say that we analyze stocks better than anyone out there, we also time the market. Now, when we time the market, we look at what's going on in the trend of the market. We follow the trend. We do not predict which way the market is going to go. So looking at this color guard gives us a sense of how we should be investing our money. If we are swing trading, we're probably doing a little bit cautious, a little bit more cautious, but we do have some bullish tendencies. If I am a longer term investor for my retirement, we have a call column that looks at the long-term call in the market called the confirmed call. We are currently in a confirmed up call. So my retirement-minded people, we are still long in our portfolios right now. Where's Kirby? Kirby's not here today. You know, has Kirby come to YouTube? Kirby was on Twitch, but I don't think Kirby has come to YouTube, so we'll see. Double K, how's everybody doing? Welcome, Double K, I appreciate it. Alessandra says, divergence on MTI. MTI went down while price and the buy to sell ratio went up. What do you think? So let's do that real quick. I'm gonna go move over to the market timing graph. So now that we have an understanding that on the home page, we are a little bit cautious, but if I'm trading right now, I still have more bullish tendencies, but overall more yellow than anything. Let's go to the market timing graph. And this is that movement of the price. The price is what we call the VVC, back on that home page. So when I go back to the home page, do this real quick, go back to the home page. The price column is what we call the VVC or VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track. And it's also on our quick list, noted here as VVC or VectorVest composite. This is the indicator that we use to time the market. We can see that all of the major indices are up today, with the Dow slightly up, more flat to up, but the NASDAQ is up 0.25%, the S&P up about 0.2%, and the composite up about 0.1%. So everything is up. Let's go back to the market timing graph. So now this is what you're looking at is graphically that VVC or VectorVest composite shown on a graph. We can now, with the movement of over 8,300 stocks, okay, that's what the price of the composite tracks. We can clearly see when the market's moving up, or when the market's moving down, or when the market is moving sideways. So currently the market, and I'm using two moving averages on the VVC. I'm going to put this on a 3-month graph. The two moving averages that I'm using on the VVC are the 3 and the 8 exponential moving averages. Okay, we can clearly see that when the market jumped up, where the 3 and the 8 crossed, was on 8/29 of 2019, and since then the market's been moving higher. Remember, as we time the market, we look at the trend of the market. But since the last 1, 2, 3, 4, 5, 6 days, what's the market doing? It's moving sideways. So could the market be finding a top and turning over? Don't know yet. But with today's activity, the market is higher than it was a day ago, but we have some selling pressure with a big wick at the top of the candle and some buying pressure with a wick at the bottom of the candle. This now becomes known as a spinning top. So the market is up, but not really going up gangbusters, but not really falling down. Yesterday, when the Fed announced the 0.25% decrease in the interest rates, look at the movement of the day. The market fell and then rebounded and finished in the candle here. It still was a red candle because it was lower than the prior day's close of candle. So we had a red candle, but that candlestick pattern is known as what? Does anybody know? Looking at the stocks, or in this case, the markets move to the upside. This candle, does anybody know what this candle formation is called? Anybody? Does anybody want to, what kind of delay do I have?
It's like 10 seconds.
10 seconds. So they should be answering shortly. All right, so I'm just trying to get a feel if anybody knows what that candlestick pattern is called. And that is absolutely right. It is called a hanging man, not a hanging Chad, but a hanging man. But we're not getting follow through today. Normally that is looked at as, nope, this is the spinning top today, Jay. This candlestick pattern that I'm pointing to right now is known as a hanging man, and it could be a possible reversal. But with today's activity, we did not have confirmation or follow through to that bearish possible reversal pattern. All right, so that's what we look like as far as the market is concerned. Let's start off with the first story. The first story is really going to be talking about what the Fed did yesterday. Is that the right one, Joey, the right screen?
Yeah.
All right, so the Fed went yesterday and did a 0.25% or a 0.25 point cut. As widely expected, the Fed trims the federal funds target rate by 25 basis points down to 1.75% from 2, and it's the second cut in a row. Still see sustained expansion of economic activity. All right, so normally when the market is moving higher, you normally don't cut interest rates. You cut interest rates when the market is in the doldrums and you try to spur the economy. But the economy is still doing good, sustained expansion of economic activity, strong labor market conditions, and inflation near the committee's symmetric 2% objective. And what the Fed's job is to do is to help to ensure that we have a strong labor market and that they keep inflation under control. All right, that's what they do. All but 3 of the FOMC members voted for the action. Dissenting were James Bullard, who preferred to cut rates by 50 basis points, and Esther George and Eric Rosengren, who preferred to keep their target range unchanged. So now, with that information, let's go back into the software and let's use that indicator that looks at what the market is doing. And there it is again. There's the VectorVest composite. Let's go put this on a 6-month level. All right. Market fell. The market's now rising, but the market is effectively looking like it's rolling over possibly, but definitely moving sideways. All right. Definitely moving sideways. So that market information by way of the Fed was very interesting. I'm going to do something else. Let's go put this on intraday, 2-minute bars for 2 days. There we go. So yesterday, the Fed came out with its information at 2 o'clock in the afternoon. How did the market react yesterday? As soon as it happened, the market responded and fell. And as the market fell, what was going on? People were like, oh man, we only got a quarter basis point, blah, 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 blah. And then the smart money came in and said, all right, this was baked in. Let's put things back into perspective. The market ran up nicely going into the close yesterday, which occurred at 4 p.m. Where am I at? 12, 9:18, 2 o'clock, 12 o'clock. I'm missing data. That's interesting. Intraday, let's do this again. Intraday, I'll put it on 1-minute bars, 2 days. Let's try that. There we go. 9. Oh, there it is. All right, so that's what happened, and then the market closed yesterday. So there we go. Going into the close yesterday, let's go set this up, 9:40, boom. That was the close of that was the last candle of the day. Yesterday, big down red candle, but look at the response as the smart money came in after the Fed started talking, and look at that run up and going into yesterday's close. Then we start with today's open, all right, at 9:30 in the morning. Today's open, we fell, and then going into later on in the session, look at that nice run up in the market today. A little bit of a rebound from yesterday's activity after it fell, hit a new high, but since about 11:38, 39 this afternoon or this morning, look at the rebound, look at the slingshot to the downside. Found the level of support, though, sitting at 48.21. Good afternoon, Manashore. VectorVest YT needs more Glenn. Which YT? Oh, YouTube needs more Glenn. Trade Shark said, bought Amazon yesterday. Bang, we'll take a look at that. Badger says, sorry I'm late. Chickens got loose and scared the goats. What a mess. Tom, you are awesome. By the way, Badger lives out in the woods way, way, way some far away. He's got a farm and all that stuff. So there it is. So the chicken scared the goat. He's got fainting goats, and the goats probably fainted. But look at what we're at right now. Look at this nice 45-degree angle on 1-minute bars. All right, look at this nice 45-degree angle, 1-minute bars as the market is starting to pick up coming into the close. We still have a few hours, couple of hours before 4 o'clock. Let's see what the market can do. So that was just to give you an understanding, that's Did I get rid of that? Dang it, I did. That's all right. That's all right. I'll go. I did it. I got rid of it.
Just go back to the first page,
Go back to this.
to the main page.
Go ahead, click on it. Yeah, so to get to the graphs, to get to more graphs. Yeah, there's the graphs up top. I can see that.
No, timing. So you close the timing graph.
I close the timing graph.
Yeah.
So click on timing, put up the market timing graph. All right, this time minimize it. All right, let's go to our next story. All right.
Maximize that one.
Say again?
The screen you're on.
Oh, maximize it. See, this is why Joey is here. Joey is here because sometimes I don't know. All right, so that's what was going on with the Fed to give us a better understanding of what's going on in the market. Now, we all know that there was a big or a strike in Saudi Arabia on their oil, in their oil. And right now, Saudi Arabia implicates Iran in oil attacks. If we scroll down a little bit, Saudi Arabia said it holds Iran responsible for attacks that debilitated Saudi oil facilities, directly implicating Tehran for the first time, but stopping short of explicitly accusing it of conducting the strikes. So we all know that oil plays a big role in our economy, right? So with that being done, let's go take a look in the software at oil. I'm going to go to, where's that first page? There it is. I'm going to go to a watch list that I've created. And the watch list, we already looked at the VectorVest composite. The next indicator I want to look at is Gush, which tracks oil. Or I can look at any oil ETF. So I'm using the triple leverage direction on Gush. Let's take a look at it. When I'm looking at an ETF or an exchange traded funds, the price and the value will always be the same. And the indicators like relative value and relative safety, which are found here, will always be at a value of 1 because these indicators are hard to track when you're looking at an index or a basket of stocks. So what's going to be most important to me is our indicator RT, or relative timing. Relative timing and relative safety and relative value and VST are all VectorVest proprietary indicators. These indicators are also cast on a scale between 0 and 2. We make it easy. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. So when I'm looking at oil or Gush or whatever indice I want to look at for oil, what I'm looking for as far as ETF is concerned is relative timing. Relative timing, again, is the short-term price trend of the stock. Is it in an uptrend or in a downtrend? Well, if it's cast on a scale between 0 and 2 and is below the value of 1, it is unfavorable. It's telling me that overall Gush is in a downtrend. When RT is above the value of 1, the stock, or in this case ETF, would be in an uptrend. So oil got affected in a bad way once the oil fields got hit. Oil prices spiked but the day after, huge overall. They spiked to the biggest point. I think it was the biggest one-day spike in oil in over X amount of years. I don't know exactly how long, but I saw an article that it was. But right now, if I'm looking to get into oil, right now RT tells me that it's not a good time to be in oil. Also, I'm looking at this recommendation on oil right now, or on Gush, is that a sell recommendation. Trade Shark says, I saw this solar grill on Shark Tank last night. Absolutely amazing. No charcoal, no gas. What does that have to do with the price of tea in China, Trade Shark? Not a thing. All right, so there we go. As I'm looking at, so be careful with oil. Let's take one more thing. Let's go look at the stock graph on it. We maximize it. There's oil. All right, there's oil, and this is, man, look at that. Just falling. Actually, that's on end of day. Put this on a 3-month graph. We did have a bump up in it, and then after that, for the last 3 days, oil has been falling. Be careful if you're thinking about playing oil, or play the other side of oil, in this case, which would be drip. I can add drip, and Joey in the video put these together. Drip is rising. This is the bearish side of oil. If you're going to play oil, you might want to think about playing it on the bearish side, knowing that, again, I'm still looking at a 3 and 8 exponential moving average. Look at the run-up of the bearish side of oil. So if you play oil, you want to consider playing the bearish side of oil. I think I can close this graph though, yes? Yeah, I can close that graph. And if I go down here real quick, yeah, I can close that graph. All right. The next story is about Starbucks, okay? Starbucks has been in the news a little bit off and on, but Starbucks pulls back this month. Technician sees new highs ahead. So the stock went from hitting a record high as recently as July to falling nearly 6% this month. And for people, this is that pumpkin latte spice thing type of year. My wife is big on that kind of stuff, so this should be a boost in sales for them. One technician sees another breakout on the horizon and could sweep the shares back up to highs. So watch this. So that's what the story says, right? Now I'm going to give you, just like Paul Harvey did, the rest of the story. Let's go take a look at the stock. Starbucks, there it is. Let's analyze it. So remember, why is it different how we analyze stocks? Well, we give you a value for every stock. That's going to help you to see if a stock is under or overvalued. What does our valuation mean? We look at things like earnings and earnings growth to analyze or give you what we feel the stock is currently worth. So right now, Starbucks is trading at $91.99. It's got a value of $61.03. So the first thing I see is that the stock is over its value, so it is an overvalued stock. Now let's go look at our proprietary indicators. RV, which looks at the stock's upside potential as compared to a AAA corporate bond over the next 3 years. Above the value of 1, favorable. At 1.07, we're going to say that Starbucks should outperform a AAA corporate bond by 7%. Long term, I'd rather be in Starbucks than a AAA corporate bond. Next indicator, RS, or relative safety. Relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. Does this company meet or exceed earnings expectations quarter over quarter, year over year? Above 1, the stock is a safe stock that predictably meets or exceeds its earnings expectation. Notice that in this list, Starbucks is the safest stock in this list. Next indicator, RT, remember, tells me if a stock is in an uptrend or not and how much of an uptrend it is. The higher above 1 RT is, the faster in an uptrend it is, and the lower below RT, or below 1, the faster in a downtrend the stock is. So right now, Starbucks is pretty flat. VST is our master indicator for ranking stocks. It's the combination or looks at RV, good stocks with good upside potential, good safety, and good timing to give you this calculation. And at 1.19, it is the second highest VST stock in this list. CI, Comfort Index, the stock's ability to withstand long or lengthy price declines. These are resilient stocks that when they go down, they have the wherewithal to come back and go back up again. CI on Starbucks is pretty darn high, but the stock is a hold recommendation. The earnings are good and positive, and they are, by way of my earnings growth, they are growing their earnings at a clip of 11% a year. Bill says, sorry I'm late. Cowboys got loose and ran over the Giants. I was watching it again. Wow. Wow. The Cowboys got loose and ran over the Giants. Woo. Woo. Jerry says, stock value is a big feature in VectorVest. I totally agree. I want to make sure that if I'm going to invest in a stock, that it's one, it's a safe, undervalued stock rising in price in a rising market. Well, if I'm looking at we'll get to Microsoft, but is that a safe stock? Yes. Is it undervalued? No. But does that stop me from buying it? No. If I have a stock that is over its value, like I have with either Starbucks or Microsoft, the first thing I want to look at is the stock's upside potential. Is it above 1? Yes. Then that's a stock that still has appreciation to the upside over the long term, and even though it may be overvalued, it may not be a bad play. All right, so Starbucks overall, that's how we analyzed it. Let's go look at the stock graph of Starbucks. Look at that. So the article says that Starbucks has a big spurt on the horizon. Well, I'm going to tell you this. Right now, the stock pulled back. Yes, it did. But look at what the stock is doing now. I'm going to put this on a 3-month graph. Did I need the story to tell me that? Well, I'm going to use the story, but I'm going to use the analysis of the software along with its graph to give you more of the story. The stock's got good upside potential. The stock is a safe stock, and the stock's RT is above 1. So all 3 of those indicators are in effect. The stock, though, is an overvalued stock. That shouldn't stop you from getting into the stock. Look at the stock, might have found a level of a floor or a level of support right here. The stock is starting to rise. Look at the 3 and the 8 are about to cross. Nice up day on the graph. Now, I always will tell you the earnings per share, our earnings per share is forecasted 12 months. Now, our earnings per share is growing. Rising earnings is the engine that drives the stock's price higher. So I know what the story says, but I'm already telling you that the VectorVest software is telling you that the stock is going to have the propensity to rise. What I'm looking for, if I'm not in the stock, is for the 3 and the 8 to actually cross. And if once they do, that may be a great opportunity all the way up into this level of a resistance. Let's go see what the high is here. Up into a level of about 98.14. You got some room to run with this stock. Rich says, I only buy safe undervalued stocks. Opened my trading account 2 weeks ago and I'm up 1.25% already. So folks, that's not just me saying that. You see that in the type itself. Way to go. Our mantra is to have you in safe undervalued stocks. But I do not want you to get deterred from buying a stock if it's representing the characteristics to show that it still has the ability to move. That is the reason why we go through this analysis. All right, let's get to the next story. Oh, dang it, did I do it the wrong way? I did. I can do it that way, good. The next story is about Microsoft. Microsoft new higher dividend still lags the market. Microsoft plans to hand more capital back to its shareholders, but even when it does, the dividend yield will be lower for the market as a whole, a key reason that the stock has soared. So dividend yield is what people look for to get into good high-paying dividend stocks. Let's analyze it. Let's get back into the software. Let's go back to that list. Let's go look at Microsoft. Well, the stock is overvalued. Quickly, when we give you that value, being able to see if the stock is over or undervalued comes into play real quick. So the stock is overvalued. Good upside potential by way of RV. Good safety by way of RS. Good timing as far as RT, and the stock is a buy, and the stock has got a CI of 1.35. Good earnings and growing their earnings by 17% a year. So this one's talking about maybe, let's go to the dividend yield. Dividend yield is at 1.3 and it does pay a good dividend. So something else that you will see that you won't see anyplace else. We have something called dividend safety. Now, dividend safety is cast on a scale between 0 and 99 or 0 and 100. And anything above 50, as far as safety is concerned, means that the stock will should continue to still pay out the dividend at its current rate or rise. So if you're in this stock for the dividend that's being paid, guess what? VectorVest says that it's a safe dividend and it's a safe bet as far as that's concerned. So this is the other kind of information that you get in analyzing a stock in VectorVest that you don't get anywhere else. So now, based on the story, let's go look at the graph, view the stock graph, look at that. Stock was moving up nicely. What is it doing now? It was in a sideways move. With today's activity, did hit a new high over the last year. Let's move into a 3-month graph. The stock was moving sideways. Look at that. And based upon the news, the stock's price did rise up, hit a new high, but watch the wick at the top. I've got some selling pressure on the day. But look at the 3 and the 8 cross yesterday, follow through with a big gap up today, and look at the earnings per share is rising. Microsoft will be a good play, but before you get on board with it, think about buying it higher than the high to make sure that you're still buying into a rising stock. Notice that the wick at the top, the stock is giving back some of its gains with the selling pressure with the wick. The top of the wick shows the high for the day. The bottom of the wick shows you the low for the day. The price is still within that range, open candle, Just be careful on it. Jerry said, sold a bull put spread on Microsoft this morning. What was your strike? What was the strike on the put that you sold? What was the strike on the put that you sold, Jerry? I'm just curious to know. I'm still more bullish on the stock by way of the earnings per share, by way of the 3 and the 8. I'm just curious to know what your strike was. Rich says, I only buy safe undervalued stocks. Open my trading. So you only buy safe. We already read that. 140, you're fine. You're close to, you bought it, you sold it at the money, which means you got a nice premium for it. How far out did you sell it? Hopefully 30 days or less. I still am more bullish on Microsoft than not. I like that it did have the opportunity to go up, but I think a lot of sellers are pushing down, but still an open candle, and I do like that the 3 and the 8 have crossed and the earnings are rising. So I don't think that that's a bad play. I don't think that that's a bad play. And look at that level of resistance is sitting right at where? That strike that you sold. That strike that you sold, that's where you sold it nice a short time. So you should be, as long as you close above 140, you should be fine. All right? So I'm going to close that. Now, let's go out to the next story, which is Verizon is the next story. Verizon CEO Hans Vestberg explains why 5G will change everything. So we all know that 5G is coming out. More and more people are trying to jump on board with it. And he says the next generation 5G networks are core to Verizon's communication strategy. And its CEO is excited about the innovations that their faster speed, lower latency, and greater capacity in high-density areas will spur. Interesting. So that in and of itself says that 5G is on the rise. Verizon is getting into that and trying to capture that market as best they can. All of the networks will be doing so, but Verizon is putting its foot forward. Let's go take a look at it. Let's go take a look. It's in my list. There's Verizon. This stock now is undervalued, trading at $59.93, the value of $64.79. So this was the first undervalued stock that we saw so far today. RV, the upside potential above 1, favorable. RS, the safety factor of the stock above 1, favorable. RT, the short-term price trend of the stock above 1, favorable. Notice that they're pretty flat, but nonetheless, they are above the value of 1. The overall ranking of it, 1.05 as far as VST, favorable. But look at that. So if I'm looking at the CI, this stock has more of a tendency to be subjected to a downturn. It's not as resilient as the couple of the other stocks that we saw. Now, earnings are good. They are growing their earnings at a smaller clip than some of the other stocks that we looked at as well, but it is still positive. Does this stock pay a dividend? Yes, it does. And look at its dividend safety is not as safe as some of the other stocks that we looked at. This is the importance of being able to utilize the VectorVest software to analyze your stocks. This is the type of information that you don't get anywhere else. And now, why we can take those stories, look at those stories, analyze them in VectorVest to give you a better understanding of if this is a stock or not, a stock that you want or a stock you don't want. Let's go take a look at its graph. We'll go view the stock graph. Look at that. Verizon, for the most part, is doing what? Over the last year, moving a tad bit sideways, right? Earnings has been a little erratic, but positive, and recently now more so starting to rise. Let's go put this on a 3-month graph. It looks better on a shorter term. Trades are okay, Glenn. Hey, have a good day. Hit them straight, Trade Shark. Hit them straight. All right. Nice run up over the last 3 months. Stock, though, still is moving sideways. The 3 and the 8 exponential moving averages are still keeping you in the stock. We like using that because it does a really good job of getting you out of the stock at the right time when it cross bearish and getting you into the stock at the right time when it turns bullish. Asif says, how much stock price change will change all the fundamentals, price, RV, RS, RT by how much? I don't have that answer as far as a percentage. But price moves RT. RT is our technical indicator. RV and RS are our fundamental indicators. And you'll notice that they won't move nearly as much as RT will because it's a short-term indicator. RV and RS takes a lot more time to move because they are fundamental indicators, but I don't have a percentage that says if a stock goes down X amount of percent, it's going to affect RV and RS by X amount of percent. I don't have that information, but I use those indicators as a means to determine whether I want to be in that stock compared to a AAA corporate bond or for relative safety, if this is a stock that I know will meet or exceed earnings, because earnings is the engine that drives the stock market or stock price higher. If I know that a stock's RS is really good, it's got a higher probability of meeting or exceeding earnings, thus keeping it rising. So I want you to more concentrate on what they will tell you more so than how much they will change with price movement. Hopefully that makes sense. All right, so that is on Verizon. The next story is AT&T. AT&T explores parting ways with DirecTV. So now I was with AT&T, and part of the deal when I signed up was that I had also access to DirecTV, or no, that I could pay my DirecTV and AT&T bill all on one bill. AT&T is exploring parting with its DirecTV unit. People familiar with the matter said a sharp reversal from Chief Executive Randall Stevenson's strategy to make the $49 billion bet. So AT&T wanted to, they bought it for $49 billion as a key piece of the phone giant's future. That could play havoc on both AT&T but really on DirecTV, right? All right, let's go take a look at AT&T, which is the ticker symbol T. Stock is currently undervalued. That's good. The stock's upside potential is above 1. That's good. The other fundamental indicator, RS, is below 1. So now, when earnings comes out on AT&T, will it hit or will it not hit? Well, below the value of 1, it's got a 50-50% at or below 1, 50-50% chance that it may or may not hit. The higher above 1 it is, the more consistently I know or predictably I know that the stock will hit or exceed its earnings. And RT is above 1, so the stock's in an uptrend. This is more of an aggressive play where it's got good upside potential, giving up some risk to make money on the stock because RT is above the value of 1. The CI tells me that the stock is more susceptible to downturns. It is a buy recommendation. Good earnings and growing their earnings at a clip of about 10% a year. Now, it does pay dividend. It's got a dividend safety of 54, even lower than Verizon's. So knowing that it does pay a dividend, the safety is okay. All right, whereas the dividend safety on Starbucks and Microsoft was much better than just okay. So as you invest in these stocks that actually pay dividends, this dividend analysis is very important. Let's go take a look at the graph. Excuse me. There it is. It is running higher. So right now, as AT&T is moving higher, thinking about dumping the DirecTV, I guess that news might have affected adversely. Let's go put on a 3-month graph. Big spike down in earnings. Remember, it's forecasted earnings. Our earnings is forecasted. Running up now a little higher. Stock is moving sideways. The 3 and the 8 have crossed bearish, but looks like we might have a level of support. And let's see if the stock has the ability to hold that level of support and start bouncing back up, taking out the 3-month high. But let's at least wait for the 3 and the 8 to go back positive again before you think about buying it if you're not currently in it. All right, so there we go. Let's close that out. Excuse me, sorry about that, folks. The next story is on FedEx. So we all heard that FedEx missed its earnings. FedEx shares plunged the most in a decade after the company's global express business showed its vulnerability to global trade disruptions. So we know that we're in a trade war with China. It's on again, it's off again, it's on again, off again, but it's definitely affecting companies like FedEx, Federal Express. Let's go analyze the stock. FedEx is in the list, 151, its price value at 145. This stock is currently overvalued. Upside potential, not good. It's below the value of 1. But it is a safe stock where relative safety is above 1, but the stock is going down in price. So Not a stock that I want right now, not a stock that I want to hold long term due to the upside potential as compared to a AAA corporate bond is not there. I do like that it's safe. Does it pay a dividend? Yes, it does, and it's got good dividend safety. This may be a stock that you will hold on to only primarily for the dividend. And Jerry says 4 downgrades on FedEx yesterday. But fundamentally, one of the fundamental indicators, relative safety, still says that it's okay from that perspective, that it should meet or exceed earnings. I bet you anything that that's falling. Let's do something here. View historical data. Nobody ever talks about this, but this is an indicator we have intraday. Let's go put this on end of day. I can watch the trend of relative safety over the last year. Relative safety, look at that. It's been pretty consistent. Even with all of the news coming out on the stock, the relative safety on the stock has been pretty consistent over the last year, between 1.25 and 1.19 or so. So the relative safety on the stock, that fundamental indicator, has been pretty steady. So that was a good little extra piece of information that you didn't know that you might have had to do, but I can track the history of any indicator over a 1-year period. So it's been pretty solid. Earnings, look at that big number as far as earnings is concerned, but they're only growing it by 1% a year. Interesting. All right, so yeah, earnings look good. Looking at the dividend safety, that looks good. But man, they're only growing their earnings at a clip of 1%. They probably need to do a lot better than that in order to get more and more people to actually buy into it. Let's go take a look at the graph. What does it look like? Woo! Yeah, so when the company grows their earnings by 1%, look at the graph. It's not pretty. Earnings, big drop off. Earnings did definitely a big drop off. Look at the 3 and the 8. Let's put this on a 3-month graph. Recently, the 3 and the 8, when they missed earnings, 3 and the 8 got hit. Right now, I'm not sure if I'm going to want to be a buyer of FedEx, or if I want to get and feel like I'm a genius, the stock could be getting a reprieve and bouncing back up, but I've got nothing to confirm that yet. One day does not make a trend. One day does not make a trend. And looking at this 3-month graph, I'm not feeling real warm and fuzzy about pulling the trigger on FedEx right now. All right. The next story is about Roku. Roku slides as Comcast Facebook ad streaming wrinkles. Roku has slipped by double digits today as investors process the potential competition from Comcast's expansion of the Flex streaming box. Ooh. And a refreshed Facebook line of portal devices horning in on the space. That could affect Roku's foothold as the leader in streaming devices. Remember when Roku was the only device out there that you could buy, attach to your TV, and have all of the streaming services like Netflix and all of that in one device? Well, finally, I got me a Fire Stick. You got a Fire Stick, Joey?
Several.
You got several Fire Sticks. I think the Fire Stick is a lot more simpler to attach to the TV, number one. And I like working with my Fire Stick. But Roku, let me tell you a little bit more about Roku. Watch this. Roku, first off, way overvalued. Roku, way overvalued. All right. FedEx is blaming the trade tariffs with China. I did talk a little bit about that, Jerry. I did. Holy smokes. So look at that. Way overvalued. That's not $31, folks. I wanted to show you that. That's not $31. That is $130. Gosh darn it. Why can't I get this? There we go. Where's Roku? That's $131 compared to a value of $10.58. That's something that you definitely want to pay attention to. Look at the relative value. This stock is not something that you want to hold long term. Relative safety, below the value of 1, unfavorable. RT, slightly or at the value of 1. The stock is moving flat. The stock is a hold. CI is kind of high, though. Very interesting that it tends to go up more than it goes down. How are you going to be in a stock that's way overvalued and the earnings stink? Not only are they negative earnings, they're growing it in a negative way as well. This is the information that you're looking at, no matter how good somebody says, hey, Joe, go buy that stock. Okay. This is why you have VectorVest. This is just why you have VectorVest. Let's go take a look at the graph. All right. And look at that. This is very interesting in that the stock's price has been rocketing, right? But the hens come home to roost, or something like that. All right, look at the earnings. Stock's price is going up. Look at earnings. If rising earnings is the engine that drives the stock's price higher, what do you think falling earnings does? What do you think falling earnings does? And that's exactly what's starting to come into play here. Put this on a 3-month graph. The stock's 3 and 8 falling. Look at that, and just falling. All right. I do know that this happens. Stock's price run up and saying, well, Glenn, why is the price going up in earnings? A lot of people still have a perception about Roku. And all of this run up is more perception than actual factual data. It's perception that it's a great tool, and more people keep buying it. It's going to grow sales. Think about that, right? But look at what's really happening. Earnings is not good. They're in negative, and the stock's price is there to fill in the gaps. All right. Let's go to the next story. Oh, actually, I'm going to give an opportunity. These last 2 stocks I'll talk about in a second. I'm going to give you an opportunity to look at stocks that you guys may want to keep an eye on. Type in some stocks that you want me to analyze. This is your opportunity to do so. Type in some stocks that you want me to analyze. And as you type them in, I'm going to take about the first 5 stocks that come up. Let's analyze the first 5 stocks that come up. Bueller. There we go. AZO. That's the first one. AutoZone. Comma. INS. Insys. INS. Intelligent Systems. Comma. MARK. Oh, he was in the Bible. Oh, no. That was Remark Holdings. Okay. I need 2 more stocks. 2 more stocks. If I don't get them, then I'll only take these 3. Going once. Going twice, 3 times sold. All right. So these are the 3 stocks. All right, I got 1 more stock I'll put in. Now you all want to put them in after I say 3 times sold. Oh my gosh. ENPH. I'll put in 2 more. ENPH and VUZI. All right. There we go. Those are the only 5 that I'm going to get an opportunity to really look at. All right. So first one, AutoZone. Love the equity curve over the last year. Love the earnings per share. I'm going to put this on a 3-month graph. Put this on a 3-month graph. 3-month graph doesn't give it nearly as pretty a picture, but what is the stock doing? It is definitely moving higher, so is volume. Let's go take off the last close. Today is not the day to buy it, though. If you're already in it and you're using something like the 3 and the 8, actually, I'm going to put on something else as well. I'm going to add another moving average. Add moving average exponential 20. I'm going to add a 20 exponential, good for swing trading. Look at that, and let's make that just a tad bit darker. Change the style. I'm going to keep the color. Actually, I want purple. Where's purple? Right about there. There we go. From a good swing trading perspective, there's a 20-day exponential moving average. It's doing a beautiful job keeping you in the stock, even on the days when it's moving down. That's the beauty behind having a plan and trading that plan. Even on the down days, you don't panic. I'm looking at an end-of-day graph. The stock is staying above the 20-day exponential moving average. Leave it alone. If I'm thinking about getting into it, let the stock take out the most recent high by at least 12 cents before you do so. Love the rising earnings. So that's what I'm looking at. If you're in the stock, you're fine. Leave it alone. If you're thinking about getting into it, make sure that the stock is rising on a day that you buy it. All right, let's go to the next stock. This one is Intelligent Systems. Did a great job with the 20-day exponential. Then it got hit. That was a good opportunity to take your profits off the table when it fell below. All right, if I were in it somewhere back here, price fell below, that was a great opportunity to take it. And now, what are you looking at now? Is it getting to be a good opportunity to get in? Yes, today, above the 20-day exponential moving average, but look at the pullback on the day. Let's get some more confirmation tomorrow before we pull the trigger. The stock is currently a buy recommendation. I like that, and I like the rising earnings. If I'm not in the stock yet, wait for another day of confirmation. If I'm in the stock, well, I pulled the trigger way early coming off of this level of a floor or a bottom, and now you look like a genius. But nothing was giving me the okay to buy it before now, but today's activity says get ready and look at tomorrow's activity and see if we get follow through, all right? Next stock is Remark Holdings. The 20-day exponential moving average, look at that. Great opportunity to stay out. Look at that run up right there. Man, oh man, whether it's the 20 or the 3 and the 8, look at that. Cross above the 20 on 827. Now, what I don't like about it is the negative earnings. I don't like the negative earnings on the stock. And even right now, it's getting better, whereas it's less negative earnings, but earnings nonetheless are negative. I would be careful with this, all right? I'd rather have you in a stock that's rising in earnings, but if the earnings looks like this and it's getting better, I would just trade that stock a little tighter. I'd have a tighter stop on the stock before I pulled it, after I pull the trigger. But definitely, I'd rather, this is a 3-month graph, I'd rather see us take out that 3-month high before I pull the trigger. I also like that as it moved up above the 20-day exponential moving average, that the stock moved from a sell recommendation to a hold. It's getting better, but I'd like some confirmation of upward trend before I buy into the stock. Today is not the day to buy into a stock that's a red bar. Oh, EMPH looked beautiful, didn't it? Put on a 6-month graph, look at that run. And look at that 20-day exponential. Then somebody on TV said, hey, I would sell it. And they did. But EMPH with the rising earnings, and this is why no matter what anybody says, rising earnings is the engine that drives the stock's price higher. Look at that. Even with this fall of the stock's price, look at what earnings was doing. And look at the stock's price now. Is this the right time to jump on board? Yeah. Nicely above the 20-day exponential moving average. Very little wick at the top. Right now, I'd want to make sure I'm buying higher than today's high before I jump on board with it. All right, before I jump on board with it. Saborium says, Mark has major long wicks. Let's go back. Did I get to Mark? You talking back and forth here? They do. But Saborium, even with those wicks, where's the stock's price stopping? Right at that 20-day exponential. So it's serving as a great guide to keep you in it. And again, I don't like the negative earnings, but I do like it's getting less negative. But as far as EMPH is concerned, this may not be a bad play to get into a stock that has recently, historically, over the last 6 months, looked like this. It could be setting up for that again. It definitely could. So 12 cents higher on the day, or let's wait for confirmation tomorrow. The last stock you gave me was Vuzi. Above the 20-day exponential, earnings are negative, but getting a lot less negative. Stock's price is pulling back. Look at the wicks, a lot of selling pressure, follow through. That's a shooting star candlestick pattern. And look at the bearish follow through. Let's see if this level of the 20-day exponential will hold and maybe kiss and jump back up. All right, maybe kiss and jump back up. All right, those are the stocks that you wanted me to take a look at. And I'm going to show you one other thing. If at any time you want to see different or hot action on a stock, I'm going to go to the Unisearch tool. I can run a search called Searches Price Volume in Daily Boomers, finding stocks that are greater than $2 that are up at least 10%. Someone talked to me about Eros. There it is. It's in there. And it's up 49%. Everybody in this room who has software, has the VectorVest software, has the capability of running this search at any point in time throughout the day. All right? And as you keep running it, you will keep seeing more stocks going up. KK said made 40% on Eros today. Thank you, Jay. All right, let's go take a look at these real quick. So this is strange action on a stock. Stocks that are up at least 10% and are greater than $2. Let's view these stocks. Let's go see if these are any stocks that you want to get into. Put these on a 3-month graph. Wow, look at Eros. This is news-based. Look at the Eros. Over to 20, look at that. Negative earnings, but getting better. Big up day today. This would be more of an aggressive move. The stock is a buy. Why is it aggressive? Because earnings are negative, but they are starting to move higher. Next one, let's go to EDSA. Again, negative earnings, getting better. 20-day moved up. Stock's price taking out that last level of resistance. Almost. Look at the body. The body is not. I would look for follow through on this, but I do know that it's negative earnings, but they are getting better. The stock with today's action just became a buy. What else is in here? TTOO, bio, that thing right there. Anyway, above the 20. How about even with the pullback? Even with the pullback, the 20 did a great job of still keeping you in it. Now, because these are lower dollar stocks, let's throw on the 3 and the 8 and take off the 20. The 3 and the 8 is still doing a great job keeping you in it. The lower the dollar the stock, the more aggressive. The more aggressive, I would then throw on the 3 and the 8 exponential moving average. If I'm not in the stock, let's see if it can take out that high first before I buy it. I also like that the stock went from a sell to a hold. Negative earnings are negative, but getting less negative. And here's another one, CBPO. Love the earnings per share. Look at the gap up today. Look at the 3 and the 8 closed positive 2 days ago. A lot of give back today. Be careful. I probably, again, buy only if it's higher than the high and the stock turned out to be a buy recommendation. Last stock, PSTV, I think this got taken over. It looks like it got accumulated. If we go to look at the news on that real quick, I bet you it got bought. I got no stories on it. Yeah, I wouldn't buy that one. That one's not doing anything. I wouldn't buy that one. Put on a 1 month, yeah, I wouldn't touch that one. I'd leave it alone. All right, but how cool is that? That everyone who has the VectorVest software, if you want to find out what stocks are rocking and rolling throughout the day, you can go into searches, price, volume within the Unisearch tool, and then go find daily boomers. All right, with that, folks, I'm about done. So we had an opportunity to look at some of the stocks that have been making news, reading the story, analyzing the stock in the VectorVest software, okay, looking at the graphs to get a better feel. This is what Trending Thursday is all about. So it's not about proving the story or disproving the story. It's taking the information from the story and getting better analysis by way of using VectorVest software. If there's any new people in here that don't have the VectorVest software, you can take a trial for $9.95. For all of my regular people that are in here, you already know the power of the software. And I always ask, if you can, type in here what VectorVest has done for you. All right, let the people in the room see that it's not just me talking, but if you've made money on a trade, we saw in here, some people made some money on Eros today, up 40%. That's awesome. In our trading room in the Jockey Club, we're up on the stock as well. So Trending Thursday is all about seeing what's in the news, what's driving stocks. I'm always going to give a presentation, about 5 minutes, of what's going on in the market, what news is driving the market as a whole. This is a great place to get down-to-earth, sound knowledge on what's going on in the market, whether it's the market, whether it's oil, whether it's gold, and of course on individual stocks making news. But the only way to grow this page is for you to invite people to come here. Like, share. And I say share because if you like the video as it's playing, share it to the people who are on who your YouTube friends are. Give them an opportunity to get some great insight on the market, and of course, subscribe to the channel. I am going to help us to grow this channel, but it's going to be you that's going to make it happen. All right? Don't be afraid to talk to other people about what we do here. All right? Let me help you to teach them. All right? So with that, folks, thank you for being here, my friend Daniel Mansour, Double K, and of course a big ooh-wee. That's the battle cry of the Jockey Club, Jay. So you already know that. And folks, I love doing this stuff, and I want this page to grow. And again, the only way that that's going to happen is if you invite people to get here. I want to get this in front of as many people I can to teach them how to use a software that's going to make life easier for them. You just closed your Eros up 56% profit for the day. Way to go, Jerry. All right, David says, added confidence and exactly what KK said. VV is my everyday routine now. Excellent. That's what I'm talking about. Tom says, helps to earn money in the market, but that's only part of the story. The rest of the story is that VectorVest instructors and support staff will teach you how to use the software, and that's what it's all about. Thank you too, my friend. I appreciate that. You know I'm a good Christian too. At least I try to be, so God bless you as well. I try to keep religion and politics out of these, but you know something? The way I feel and the way I'm going to always say, you can't keep God out of everything. So there you go. With that, folks, have a great day. It's my pleasure to be here, and I'm glad that you guys take the time out of your day to be here as well. And Joey and I are really trying to look into a possibility of doing more of these, at least now, maybe expanding the YouTube live to 2 days a week. Let us know what you think on our YouTube page. Let us know if you'd like to see us do that, if you'd like to see us put up a second live throughout the week, maybe on Wednesdays and Thursdays instead of just Thursdays. But again, let's get to see your interest in if this is what you want to see. All right, so with that, folks, adios, arrivederci, ciao, au revoir, sayonara. See you, many of you tomorrow. Later.